Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Amir with the Bulletin Board Heroes on Tuesday, the 18th of February, sponsored by the UK Investor Show. That's held on Saturday, the 25th of April. Starting off with Bushveld Minerals, which seems to have come back into business for the bulls after a long absence. Here you can see the break of this triangle in the 50-day moving average at 20.47. Hopefully, we'll see the shares at least retest the old October peak through 28 pence. Cautious on the stock, maybe wait for a weekly close above the 200-day line, but doesn't look like that's necessary after the long green candle through the 50-day line that we saw yesterday. Stop loss at this stage really back below 19, which is pretty obvious as far as you can see on the chart. A bit of a lap of honour as usual with Deb Clever, just on the basis that it's worth pointing out that shares have now easily cleared the 200-day moving average at 3.39 pence. Support really, I suppose, back at the 3 pence level if you're trying to run the position higher. The target, as I've said before, as you can see from the line, up to 6 pence over the next month or so as a best case scenario target. Rather surprised to see ECR Minerals back as well. Here we've got a triangle break for the shares. Obviously it's been a rotten ride and a very slow one as well. Breaking that post-June consolidation within that triangle, breaking the 0.75 pence level already through the 200-day line at 0.81. End of day close above the 200-day line should be enough to get the stock started for a move towards the 120 area, which is where the shares were mid-year last year. I suppose if there's a trend channel to draw to shoot for, that would be as I've drawn there up to 1.3 pence, but anywhere around 1.2 probably the place to focus on. Only back below the 50-day moving average at 0.68 pence, really undermining the bull argument at this stage. Also in focus on a bullish perspective, IDE Group might be slightly early, but the shares have consolidated well after breaking the 200-day line mid-year last year, never been below the, not even touched the 200-day line since. That's at 3.3 pence. So it looks as though really all we're waiting on now is clearance of the top of that falling wedge at 3.9 pence plus. That's also the area of the 50-day moving average as well. The reason for jumping the gun here, incidentally, is the way that we've actually gapped up through the middle part of the wedge, let's say, and that's something that you only really see in the most bullish situations. So it's actually valid to have your finger on the trigger a little bit earlier as far as a setup like that is concerned. Target initially just an obvious retest of post-October resistance at 5 pence plus. Stop loss back below the 200-day line, currently rising at 3.3 pence. Farron Pharmaceuticals is a stock which was covering quite a lot, I suppose, in the autumn. The situation then was we sort of peaked out around the 300 pence level. What's notable this time is we've gapped through the 50-day moving average at 253. Bottom the gap there at 245. So above 245, looking for a new leg to the upside to begin, and that would probably be towards the £4 level, which is the top of a rising post-October price channel there, so reasonable risk reward there. Above 245, looking for £4 on that situation. Stock which I'm taking quite a shine to at the moment is OncoImmune, largely because it's a slightly less hairy version of Novocyte at the moment. We had the gap through the 50-day moving average. I suppose I talked about that on Friday, so I can sort of be cheerful that so far it's worked. In fact, it's worked very well in terms of a near vertical move to the upside, long green candles as well. So it looks as though we'll easily hit the previous resistance area from July, August around £1. And after that, who knows, maybe a little bit more as well. Possibility of hitting that August resistance line projection at £1.20 over the next, I suppose, the next couple of weeks at the current rate of progression for the shares. Only slight negative at the moment, the RSI at 89, which is highly overcooked, but doesn't seem to be bothering the shares right at the moment. The gap through the 50-day line near the bottom of the range is one of the prime setups for the bulletin board heroes, and that's what we've seen now at Reach for Entertainment, whatever the fundamental situation is. The view at this stage is that at least while we're above the bottom of the gap at 0.9 pence, the shares could head towards 1.2, 1.3 pence, which is post-March resistance, although given how illiquid the situation is, a little bit of risk, a modest amount of risk is added in on that particular issue. It's also the return, but welcome back to Thor Mining, which looks as though it is breaking out of that little channel that we've been in since the end of November. Breaking 0.32, I suppose, is the trigger level on an end-of-day close basis. So we'll see how the shares manage over the next part of the session. Stop loss back below 0.3, obviously. If you're cautious on the shares, maybe wait for an end-of-day close above the 50-day moving average at 0.38. But after that, we are set up for a top of November price channel target as high as 0.6 pence. Finishing off today with tertiary minerals, which the Twitterati seem to have got very excited about so far today. Not entirely convinced at this stage, but at least while the shares are above 0.21 pence and the 50-day moving average, this is a valid breakout or recovery, and we could at least retest the main post-May resistance at 0.35. Stop loss, I suppose, back 0.19 or so at the moment. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.